Hey, welcome to Dow's Stock Talk, where I talk about topics relating to investing in finance, but more specifically being stock market. In this video, I'll be doing a stock analysis on Amazon. This one, I'll keep it more general, so it's not like I normally formally lay everything out. I'm just testing different ways to analyze a particular stock or this one. So this one will be more like me talking about certain types of things about Amazon and things you may want to look for when you're particularly buying Amazon stock. Now, recently, I'll go over a little bit of the news, some financials, and key things that you want to keep in mind whenever you're thinking about investing in Amazon. But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps you to know that content videos reach a broader audience. And also, if you're interested in finance and investing, you like finance and investing t-shirts like this, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. So if we look at Amazon right now is $122.72. You have to remember they recently did a 20-to-1 stock split. Yeah, they recently did a 20-to-1 stock split. So before then, I believe the share price was about like $2,400. If you guys don't know what a stock split is, it's pretty much where they're issuing more shares out there. So as far as the company's fundamentals and all that, nothing changes. You can kind of think about it as if a whole pizza. Suppose you had one pizza, but another way you could have that same amount of pizza if you just cut it into 20 slices. So the pizza is still the same amount, but you have more slices. What we do realize about the Amazon stock split, a lot of times when the stock split happens, a little bit before something, we see a slight increase. And matter of fact, let me see if I can pull up one of the charts so you can kind of end up seeing this. Yeah, so this is Amazon chart as you see right here. The S stands for stock split. So as you can see, sometimes normally after a stock split, it goes up, increase a little bit temporarily. Estimates is coming out pretty soon, so we'll end up seeing how it end up doing there. But like I said, let me not get too far off topic. But let's go over one of the important things about Amazon is how they particularly make their money. Now, let's briefly go over Amazon different streams of revenue. This chart it's a little older, but the breakdown as far as the percentages of how they end up their streams of income is roughly about the same. So online sales, about 50% comes from online sales, physical and digital products. Then we have the third-party seller service, third-party sellers where you get money off of commission, shipping free, and other services from someone else, a third party selling on the platform. Amazon Web Services, this is the key, folks. This is the real money maker. 12.5% of their revenue comes from Amazon Web Services. You can think about like cloud computing. 6.1 comes from physical subscription, 6.9, and 5 from others. Now, as far as the total amount of revenue and stuff like that, we won't particularly use this one. All right, so this is like another breakdown of the revenue, but these are more recent numbers. So from the online stores, this is 2020 or something like that. Online stores, 163 billion. Web service, 40 billion. Third party, 63. So a lot of their revenue is coming from online sales. Good to mention. But next up, we have the third party and Amazon Web Services. So like I said, I just wanted to go over that so you can see 22 billion came from subscriptions, 17 billion comes from physical stores, 17 billion comes from others. So you can just kind of get a good idea of that. So Amazon for this year to date, tech has taken a major hit. So from year to date, it's down about close to 30%. But this is due to the overall market being bad. Inflation, Fed's raising interest rates, supply chain issues. So a lot of particular things are going on. The overall market is still in a downward trend, and tech got demolished. Yeah, so let's go a little bit into Yahoo Finance. So if we can look at the financials, let's look at the revenue. We had $232 billion in 2018, 280 billion in 2019, 2020, 386, and then 2021, 469. So we went from 10 billion to 11.5 billion to 21 billion. So we've seen a huge increase there. It's probably due to the pandemic. So 21 and 33. Now, if we also going to see more recently, in quarter one, Amazon actually lost particular money there. So we definitely don't like to see that. But the thing is, you have to always know why. So if you want to know why, what ended up happening is Amazon made an investment in this company, Revere, I believe. And, it's electric vehicle. And since they own stake in it, whatever happened to that particular company, the stock price goes up and down, it will affect Amazon. Just to kind of give you guys a heads up, Amazon, and as far as a lot of their income, they reinvest it back into other companies, other investments, and stuff like that. So a lot of times that earnings, that revenue, the income that comes from Amazon operations and stuff, it goes back into the business. So 7.6 billion was lost from the Revere estate. That company stock price end up going down dramatically. So they lost about a reported $7.6 billion loss there. So if you kind of remember that one, 7.6 billion they lost from that one. So if you kind of disregard that, their earnings will actually be positive. But that's why you kind of have to keep in mind of what's going on and what type of business it is. So Amazon, they do a lot of investing. So you really want to pay attention to the capital expenditure, things that show, okay, if we're spending a lot on capital expenditure, what are you spending it on? Because you invest in Amazon and they're investing a lot back into the business. You want to know what they're investing in and what future outlook that could bring for the business. We look at see they as far as meeting earnings right here, they missed it big time. But like I said, I would say that's a fluke. That's when they beat this one. So to me, as far as the earnings and stuff like that, I don't want to get too caught up in the short term because I'm a long-term investor. Like I said, normally when I'm looking at investing, I'm looking at least hold it 3 to 5 particular years. Anything farther out of that may be too hard to kind of calculate of what they think a realistic price is, not unless the company been around for like 20, 30, 40 years. But a lot of the newer companies, after 3 to 5 years, it's kind of hard to predict what will happen. Check out Simply Wall Street to just get an idea, as looking at it from the fundamentals and the financial health and things like that. As we know, they're competitors. And actually, let me go back so you guys can actually see. And this one, I like it because they show the breakdown of their competitors. As far as like online stores, you got competitors, you have Walmart, TD.com. Competitors, as far as web services, you have Microsoft. As far as third party sellers, eBay, Etsy. You can even throw Pinterest on there. You could probably even throw Shopify on there, as well as subscription services, Disney Plus, Apple Music, Netflix. So it's physical stores, Walmart, Costco's, Barnes and Nobles, and as far as any type of payment, Visa, Master. So they definitely have a lot of competitors. As we can look at I like to look at the industry, U.S. online retail, 35% just to know year to date in Amazon. But as far as, I think this one may be a little bit misleading. I think you're going to have to start comparing Amazon to maybe cloud computing right now. So that one may be a little bit, but it's good to know that even though they're down less than the industry. So that's normal. It's a little less volatile than the industry. So that's particularly good. Now, as we can see, the price to sales is 2 to 6. P over E ratio is 58. Now, I will say that if you're looking at historically, Amazon P over E ratio is low compared to historics. However, the company has been getting bigger. They have been getting bigger. So their outlook as far as revenue growth and earnings has been much smaller than usual. So that supposed to slow down, and they're growing at a much slower rate. which could justify that. But like I said, I just wanted to let you know, price this normally when these numbers are lower, from an value investing perspective, or you're kind of looking for a bargain, meaning that if these metrics are lower, you can get more of the if based off of the share price, you can get more of the company based off of their productivity. Well, let's go over the earnings and revenue brief. 477 billion, cost of revenue 276, gross profit 201. And look at this. This is what we see, other expenses 179 billion right there. And then we'll see the leftover of $21 billion. So we see a lot there. Now also we gotta look at the gross profit and net profit. So their net profit margin after you count all the other expenses is very low. Gross profit is not that bad, but net profit is very low. So that means a lot of their business have small profit margins until we get on that Amazon Web Service like that. Now, if we look at as far as the what they call discounted cash flow, where you value a stock based off of what you think the future cash flows could be, you discount it based off of the capital, the weighted capital, and then you would actually come up with a value. Now, this one on this particular site, these are done by different analysts, and you always want to take this with a grain of salt. But I'm kind of gonna give you guys a little insight. A lot of times for companies like Amazon like this, these is normally only reliable for companies who have steady cash flow. Amazon cash flow right now, because they do a lot of investments and capital expenditures and stuff like that, it can be very inconsistent. So projecting out a cash flow for this could be missed, particularly leading. But according to what their projections would be as far as earnings and revenue growth, they conceive that the price is attractive. Me personally, from what I've seen, I would probably, if you had to pick a price point, I like Amazon more like $100, 105, 106, 108, relative to the price it was before the stock split. Revenue and so the revenue is in the blue, earnings is in the green, and free cash flow is in the pink. So let's see for 2000. Oh, I already went over that. So for free cash flow, as we've seen, it ended up taking a huge decline right there, as far as because they've been, like I said, they've been doing a lot of reinvesting, as you can see, and of course the pandemic and stuff like that, sales and things, as far as sales and stuff end up slowing down. A bit. So if we can see a negative cash flow, we didn't see that previously before. So that's where I was end up seeing. So that could be suggested why they forecasted their forecasted annual earnings growth is much higher, simply because in the last particular quarter they end up losing money. So if it was increased, that means they'll just lose less money at a faster rate. Or if they had like some type of incline, which they probably will, that would justify why their earnings growth would be much higher. It's a key thing how Amazon makes its money. They normally break it down into 3 segments: North America, International, and Amazon Web Service. So as you can see, as far as the breakdown, all of their operating income comes from Amazon Web Service. So if we look at any other category, they actually was losing money. Where it kind of shows you, I'm going to show you exactly where the 3 segments, North America, International, and Amazon Web Service. As you can see, North America, remember this is be like online sales and all that stuff, for 2022 lost money. International lost money. And as you can see, the Amazon Web Service the only one end up making money from there. So I just wanted to kind of let you guys know. Like I said, it's a general overview. I just talked a little bit of the key highlights or key points that you want to consider before you buy Amazon. Like I said, me personally, I like Amazon more so around the May prices, maybe around the closer to the 100 mark. I like Amazon as that. Like I said, I'm looking at Amazon as a long-term play. So I said, let's say this is what about the $100 mark or something like that. So I could buy some at 100. And the next thing, which you could actually end up doing if you didn't want to buy all at once, since at the $100 price, it could be a little bit more sophisticated strategies right there. So suppose, we see we on a downward trend, you buy some at 100 or something like that. It continues to fall. A next place where you could probably, and this is just giving you roughly ideas, the next place you can maybe buy some a little bit more is on 80. So a lot of times people may be the idea of buying the dip. You have to be very careful with buying the dip. Buying the dip in the bull market works very well, but when you're in a market where in a bear market or something like that, which bear markets last a year, like six, could last a good long time, so you just don't want to buy every time it goes down a little bit. But remember, we are investors, so we already looked at as far as Amazon evaluation of what we think is a fair price. So what you could do is kind of buy at the supports. So right there, like I'm just briefly like 80 something again, and then maybe 60 something here. So you can lower your cost average basis while also you're not just looking at it, you're not just buying Amazon stock just at whatever prices. You're already at one, you're already, as far as an evaluation perspective, it's already at a decent price. Millennial or Everyday Money or something like that, they have a YouTube channel. I probably put it in the description. And I use their software or something like that because it could be kind of useful. Like I said, I use various different tools like this, and this is just way, a lot of times, to save time, I use a lot of other people's software or data collection that I particularly trust, which just allow me to be more efficient. Because a lot of times, if I do it myself, the numbers came up about roughly the same, and most of the time, the assumptions that I'm particularly making will probably be something similar. And tech companies like this and stuff, being super accurate and all that stuff, it's kind of tough. And you can see right here, they already have it where you have the historical 1 year, 5 year, 10 years. What I'm going to say, what I think their revenue thing growth, I'll say, let's just go with, I'm just going to go on the high side. I'm thinking 15. On the low side, we'll go with 7, and then mid, let's just say we'll go with 10. Profit margin, I'm just going to just keep it the same. I'm just going to keep it at 22. That may be able to increase more. And let's say cash flow, we could just keep that about at 25. 25 there, 25 there. It says desired annual return, so let's just say we wanted at least a 10%. And then we'll keep this the same as well. PE, let's say 15 at a PE multiple. 15. Yeah. So like I said, I just threw some numbers roughly. I say revenue growth, low side 7, high side 15, gross profit, I just kept it on the lower side 22. Free cash flow margins, I kept that about the same. As far as POVE ratio, I'm expecting their earnings and stuff not to be as significant, so I just made a POVE of multiple paying of 15. Free to cash flow, I just kind of roughly kept that the same, and the desired annual return. So if I want a desired annual return of 10, I just put that there. And then on the low side, they had as far as the multiple earnings, 103 on the low side if I wanted to get that, relatively return. Now the current price is 148. On the high side, it would be 187. So these would be prices that I would be paying if I wanted the desired outcome, assuming that these assumptions would be correct. Notice that these are assumptions, and the more insights you have, the better assumptions these will be. So if you just tweak these numbers just a little bit, these numbers will change drastically. So it's all about your assumptions that you make that would kind of really determine. See, let's just say if we put this, just gonna give you an idea. If you put this, you'll see how drastically the numbers change. So you just can't be coming up with, sometimes that's why you gotta watch analysts and stuff like that. People just be coming up with some random numbers and stuff like that. These are numbers from my personal experience, from my personal judgment of numbers that I think could definitely be realistic. So anyway, in a nutshell, that's what I think. Let me know in the comments below, what do you think about Amazon, and also what do you think about this stock analysis. If you haven't already, make sure you hit the like button. If you subscribe to my channel.